Hello everyone. In this faculty enrichment program, we are going to look into coffee can investment portfolio. In fact, I have divided the entire presentation into two parts. First page talks about the introduction. Second page talks about the research part of coffee can investing. In the introduction part, we are going to look into the history behind coffee can investing, who introduced this concept to the world and to India, and what how coffee can investment portfolio can be created, examples of coffee can investment portfolio, and moving on to research part. There are various researches being done on this coffee can investment portfolio, but for our understanding, I took the example of recent research done by two Bangalore students on coffee can investing. They have taken this research, they have explored the findings like, is coffee can investing a better investment option for the investors, which is going to fetch more than the you know returns which we can derive from the other investment or asset classes. So slightly, having said this, having introduced the discussion subject to us, let's move on to the introduction part now. I told you in the introduction part we are going to look into the history of or the story behind a coffee can investing. Actually, this concept was emerged in Western America, where people used to keep their residual income in coffee can and hide that coffee cans under their mattresses, and later they use it for the investment purposes. That's how the concept came into being. But I have a small contradictory view here. In India, this is a common practice that now our Indian mothers, they used to keep their residual income in the grocery dabas, and these things are happening in India for years together, and nobody is going to talk about it. Something happens there in USA, people are ready to talk about it. Fine. So coming back to this coffee can investing concept, I was telling you about the history. Having said the history, let's move on to the person who introduced this concept to the world, Mr. Robert Kirby. In 1984, he has written a book on coffee can investing, and in that book, he referred this particular investment concept, what the concept is all about. This coffee can investing is basically a equity investing concept. Equity investing concepts are broadly classified into three categories. Category number one talks about value based investing. Category number two talks about growth based investing. Category number three, that is this one, coffee can investing. What is called value based investing in equity? Value based investing in equity talks about, it's like, when you buy something, when you feel that it is worth buying, then it is called value buying, value based investing. So similarly, when you buy some company shares and feel that this company's share is worth buying for you, then it is called value buying for you. Either it can be done by you or with the help of your broker, or you might be an expert to get into this particular activity. So move on to the growth based activity. Growth based activity talks about, if you are able to find out the company shares which are on the growth path, then you are into this growth based strategy of investing. Then moving on to the last part, which talks about coffee can investing, wherein the investor is expected to gain the return consistently for a period of time, but he has to wait for a minimum of 10 years time. But it is not going to be easy for him to go for this coffee can investing, because he has to follow certain procedures procedures are going to be discussed in the subsequent slides to come. Those who are really interested to know something more about Coffee Can Investing can seek the help of the link provided over here in the slide. Coffee Can Investing strategy neither works on value nor growth. It works on quality investing. What does it mean? I told you something about value, growth. But what is this called quality investing? So quality, in the name of quality investing, we say that as an investor, you'll have to find out the quality company's shares with certain criteria. What are those criteria? Those criteria are going to be seen in the slides to come. I tell you. But if you are good enough to identify the quality shares from different companies, thereby your portfolio is going to be good and it is going to perform better, and the return is going to be much better to you. Coffee Can portfolio investment says that when the holding period is higher, the return is going to be higher to you. In India, what happens normally, the investor is not going to hold the security for more longer period. Thereby, the return is not going to be much higher when compared to the investment like Coffee Can investing. Okay, so having said this, let's move on to the next one. A nutshell about Coffee Can investing. I told you Robert Kirby behind this Coffee Can investment portfolio. He is from Los Angeles Capital, USA. And he says that it's a buy and hold strategy for a longer period of time, for a minimum of 10 years, and you don't have to panic because it is like fill it, shut it, and forget it strategy. So there is no panic for you to lose your principal. Then in this case, no commission or other charges are involved. Then you can think about retirement plan with the help of the huge corpus money that you're going to get after the investment period, and then dividend and bonus is going to be huge for you in this case, and then low risk road to stupendous wealth. See, in India, the same concept is introduced by Saurav Mukherjee sir. He has written a book on this Coffee Can investing along with his friends. He says that it is a low risk road to stupendous wealth, a platform wherein one can seek the help of this Coffee Can investing if one has the patience to wait for more than 10 years. Then it is a buy and forget approach to investing. That's what he says. So briefly I have told you about Coffee Can investing. Now we shall move on to the successful investment in Coffee Can investing as an example. Robert Kirby, I told you, he has written a book on Coffee Can investing, written a paper, an article on Coffee Can investing in 1984. In that article, he has referred that one of his clients has invested 5,000 pounds in one company shares, for example, Xerox. Later, in the span of 10 years, the 5,000 pounds grown to 8 lakh pounds. So because this investor is having the patience to wait for more number of years, thereby he is able to gain more profit. So then in India, who drives Coffee Can investment portfolio? It is none other than Ambit Capital Saurav Mukherjee. Ambit Capital Saurav Mukherjee, right, since 2010. And if you want, those who are interested to know something more about him can get into the link provided over here. And then he suggests some criteria to go for Coffee Can investing. He suggests that 100 crores of market cap with minimum market period of 10 years, and then 10% revenue growth and 15% ROCE, that is return on capital employed, for each one of the last 10 years. And for financial firms, the terms are going to be different. The return on equity of 15% and loan growth of 15% every year. And examples are given over here for our better understanding right now. So these are the examples for you. HCL Technologies, Lubin, LIC Housing Finance, then Page Industries, then Amara Raja Batteries. So if you are interested to go for this equity based investing, you are welcome to do that. Thank you. Then moving on to the next one, these are the examples of Coffee Can portfolio by Saurav Mukherjee in 2016 and 2019. And what is called a Coffee Can portfolio? See, this portfolio talks about investing our money into equity shares, and be allowed to wait for more than 10 years. span of time. But it is not just merely investing our money into some companies which we do not know. So this is going to be done systematically. Some expert will be out here, or we ourselves can analyze the stocks, scripts, companies which are performing better, and we need to follow certain criteria as well. So having followed all those criteria, then we can invest you know our money into the best selected company shares, and let's wait for more than 10 years. Thereby we are going to gain some fruit in the end of the investment period. How can one create the coffee can investment portfolio? That is an important question for us to answer right now. So one can create coffee can investment portfolio by keeping following parameters in mind. Choose stocks of those companies which dominates the market and have competitive advantage. Have a highly concentrated portfolio of 10 to 15 stocks and intended churn of less than one stock per year on average. Choose stocks of companies having excellent financial track record of revenue growth and earnings for over 10 years. Don't focus too much on a particular type of stock. Keep it diversified to lower your risk. And then it all depends on the market experts of a platform who has studied the future growth of themes in detail. So these are the steps that we are going to follow. That way we can invest our money into coffee can investment portfolio. There are advantages, disadvantages of coffee can investment portfolio as well. Advantages talks about riding the wave of turbulent markets. So you can survive in any conditions of the market when you invest your money into coffee can investing. And over the long-term investment course, the magic of compounding does the trick of multiplying your gains manifold. So compounding interest rate is going to be increasing on your investment, thereby your return is going to be high. Investors can avoid large fees that come along with short-term investment. Short-term investment, we need to pay fees and other charges then and there. For example, your broker is going to charge 0.5% per transaction for you. So what happens if 10 transactions are done by you? It's going to be like 5%. Though it looks like 0.5% initially, now after 10 transactions it becomes 5% to you. So thereby the charges are going to be increasing when it comes to short-term investment, whereas in long-term investment the charges are going to be nullified. Then investing in great quality stocks for longer term can give you good returns as well. So these are the advantages. Then when there are advantages, there are disadvantages as well. So what are the disadvantages? A large amount of fee needs to be paid for supporting research on organizations. So you don't have to pay charges to your brokers, but here you need to pay fees to your greater research institutions, because they are going to do research on behalf of you. Thereby you need to pay some money to them. That's going to be huge for you. And many investors withdraw over looking at the short-term benefits and thus ignore the long-term benefits that waits for them. So most often what happens, people don't wait for a longer period of time and they look for short-term benefits. Thereby they don't have the patience to wait for a longer period of time. So they lose opportunities here of making more profit. So we can enter wrong scripts based on market tips and improper research. If you don't do the research properly, then what happens? You may end up with the wrong, market tips and improper, research. Thereby, you are not going to gain more. So new industries entering the market and replacing the good old timers can lower the performance of certain stocks. This is also possible. Then buying and holding a poor quality stock for a longer term can lead to wealth destruction. So if you have taken wrong investment decision, then you are not going to reach out to the place where you want to land up. The fact that past performance is not indicative of future returns. This is one of the important limitation over here. So most often the decision, this coffee investment decision is taken based on the past performance, but there is no guarantee, that past performance is going to be highly reliable for you. So just think about it. And tax and other customer attrition rate is ignored in this coffee can investment portfolio. So just think about it then before going for investing into this coffee can investing. So does it really outperform the other investment options? So this is the area where I would like to do a research, and because people are this concept as such says that when you invest your money into coffee can investing, and the profit making opportunities are going to be huge for you. They claim that way. So I thought, why don't we get into a research? Because before me there are a lot of investors, a lot of researchers as well. So they have done some research on this, and I am also interested to get into the research in this particular area. So I wanted to know the performance of I wanted to compare the performance of Copycan investment portfolio with the other asset classes performance as well, with the same amount of investment for the same period of time. So is there a Copycan investment portfolio available for Indians as well? Yes, of course, Indian investors can go for Copycan investment portfolio as well. And the research is going to be like this. I told you already. So I wanted to get into the research. My research area is going to be like Trichitamba. So the concept claims that Copycan portfolio investment provide higher returns than other asset classes. So I wanted to check, is it really true or not? So with the help by doing the research like this, but this research is not done by me, it is done by somebody else. I just have the same idea, and I wanted to collect a similar kind of data as the research is done, and I wanted to do the similar tools and amount and period I wanted to take it forward. So objectives of study is going to be like this: to analyze whether the Copycan portfolio can provide higher returns than other asset classes such as gold, debt, fixed deposits, financial products such as mutual funds or exchange traded funds to an investor who has a long-term goal. And then to analyze and compare whether the Copycan portfolio is able to provide higher returns than other asset classes or financial products. The returns provided by the Copycan portfolio have been compared to that of Sensex, BSE 100, Nifty 50 and mutual funds. After analyzing and comparing the returns that the Copycan portfolio had given to the investors compared to the returns that were given by the Sensex, BSE 100, Nifty 50 and mutual funds over the same period of time with the same amount of investment. See, actually I told you earlier, see, the amount is going to be very same. See, for example, we have two different options with this. This side we have got Copycan investment portfolio, this side we have got other asset classes. In Copycan investment portfolio we are going to say invest say 1 lakh rupees. Similarly we are going to invest 1 lakh rupees into other asset classes as well. The period is going to be 10 years here. Here also the period is going to be 10 years. So let us invest our money into this and this, wait for 10 years, let's check the performance of these two portfolio, and at the end of the 10 years let's see the real performance. Thereby we will come to a conclusion. So this study talks about it, and there are researchers Abhishek Johnwall and Ankita Agarwal. In 2018 they did an research on this, the Copycan as an investment portfolio, and there are other so what did they do actually? So whether Copycan investment portfolio can provide higher returns than other asset classes such as gold, debt, fixed deposit, mutual funds and exchange traded funds, etc., to an investor who has a long-term goal. By comparing returns of Copycan investing with Sensex, BSE 100, Nifty 50 and mutual funds, found that in the long run, more than 10 years, Copycan investment portfolio outperforms other indices. That's what they have found out. And there are other review of literatures available here. They have done the portfolio selection, portfolio construction and preferences of shareholders, and then portfolio management strategies by using chi-square test, Sharpe's trainers index and Markowitz portfolio model. So those things are taken into consideration. I would like to consider all this for my study as well, with the help of your suggestions too. And research design is going to be this way. The problem that many financial services providers are facing today is that they are finding it harder to give higher returns when compared to the Nifty 50 index, or the returns that they had provided earlier, because of the market becoming more mature and stable. Many mutual funds are not able to beat the indices such as BSE 100 or Nifty 50, which has brought into question the high commissions that they charge which are as high as 2% while providing returns which outperform the BSE 100 by only 2 to 5%. So sources of data, naturally secondary data, and hypotheses are like this. Null hypothesis says that coffee can investing does not give higher returns than other asset classes or investments. An alternate hypothesis says that coffee can investing gives higher returns than other asset classes and investments. And the limitations of this study is like scope of the study is restricted to equity market. There is a lack of articles, research papers that are relevant to the topic. There are very limited tools which can be used for analyzing the type of data. So these are the limitations. And moving on to the data collection, how the data analysis is done. It's basically a comparison between the coffee and investment portfolio return and Sensex return. Look into the last three columns wherein we can see the CCP TSR CAGR and the Sensex TSR CAGR, and the difference between the last two columns. So in the year 2000, what happens? The CGP TSR CAGR 22.6%, whereas Sensex TSR CAGR 16%. The difference is going to be 6.6%. Similarly, when you compare these two with the other years, the CCP has performed much better than the other investment asset classes. That's what we can understand. So moving on to the next one, talks about the difference between equity mutual funds and BSE 100, whereas we come to know that equity mutual funds performs better than the BSE 100 over here. And the interpretation, the researchers said in their research is like this. My interpretation will be different when I do the same kind of research after some time. So as we can see from the above data, if the investor had invested 1 lakh rupees in 1980 in the Sensex, it would today be worth of 34.2 lakhs when compared to other assets such as gold, debt, cash in Sensex. It's already outperformed other asset classes in terms of returns. From table 1 and 2, we can see that the coffee and portfolio has consistently outperformed the Sensex over the last 2 decades in terms of returns, which is clearly better than the returns that the mutual funds have given, which just a meager of 0.5% to 0.2%, and even negative if you use standard deviation. If you or we use if you or we use the standard deviation. After analyzing the above data, we can say that coffee can portfolio is the one that not only beats the Sensex but also beats other investments such as mutual funds, gold, debt, cash by a long margin. So that's what we can understand. And once this understanding is done, then we should move on to the next thing, findings. So findings are like, after analyzing the data, it is safe to say that the returns that the Sensex has provided to an investor has been higher than that which is earned by the other asset classes such as gold, debt, cash, or even mutual funds. A coffee can portfolio has provided higher returns than that of Sensex consistently over the past decade. So if an investor made an investment in a coffee can portfolio for 2 decades ago, then today they would have got returns which were not only higher than the Sensex but also other asset classes or even mutual funds. So it is suggested that to an investor to make an informed decision about the stocks that they hold in their portfolio, and it is also suggested to an investor to first learn about what a coffee can portfolio is and make an investment in coffee can portfolio according to their medium term or long term goals in life, such as buying a house, a car, or even retiring early. So since the returns that are given by a coffee can portfolio are relatively higher than the other portfolio, mutual funds or asset classes, and the unsystematic risk involved is almost diluted to nil, the investor will be able to easily achieve their medium term to long term goals without applying much technical knowledge. So conclusion, I would say that it's like forget it strategy. Full start and forget it strategy, like select, invest, and then forget about the investment strategy for 10 years. So if you are having the patience to wait for more than 10 years, but this should be done systematically on equity investment. uh, if you do that, if you have the patience, then definitely there is a possibility for you to reap fruitful fruits in the years to come. Thank you very much for the patience and listening. If at all, if there is any questions for me to take it up, I'll take it up. If there is no, then you can just put your questions in the chat, but I'll answer those questions in your mind. Thank you.